I always thought that investing is all about finding undervalued stocks and buying them cheap. But this one book completely changed the way I think about it. This book is by Howard Marks. In this book, he talked about the difference between level 1 and level 2 investor. Level 1 investors usually just look at numbers and they ask questions like, is the stock cheap or expensive? But level 2 investors ask, why is this stock cheap right now? And what is everyone else thinking? And that was the moment where it completely shifted my mindset. I started noticing something that I used to ignore, the market psychology. Sometimes when the stock market goes up, as the bull run begins and stock prices keep climbing higher and higher, often than not, the market swings to extreme optimism. This means that as long as the prices of stocks keeps going up, this company is a good company. I begin to ask, what is the market emotion right now? Do I want to follow it or do I want to take a step back? Now recently, this picture here has been particularly popular. Everyone is talking about the AI stock bubble. As you can see from the picture, there are only a few companies that is actually cash rich, which means they have the money to issue contracts to other smaller players. And as a result, a smaller player gives a contract out to even smaller players around the AI infrastructure. And usually when stock prices goes higher and higher away from their actual earnings or fundamentals, things usually don't turn out well. At the start of 2024, I started looking at AI and chanced upon TSMC producing the AI chips. And as the AI fever started picking up, everyone started to look at the semiconductor sector. And being the rare few players who produce the AI chips, TSMC stock prices started to go high. When I look at the numbers of TSMC, the price to the earnings ratio of the company has crossed beyond 35 times. What this means that for every $1 that the company brings in, the stock price is now trading at 35 times of its earnings. So the growth expectation has become higher and higher. And at some point, I asked myself, is this getting realistic or unrealistic? So I began to reduce my position, not because out of fear that the company will not do well in the future, but because I was aware where are we right now in the cycle. And this is what about level 2 investor means. It's not being about a contrarian for the sake of doing it, but it's about having the awareness and the ability to decide what is the next step to take. Have you ever felt the hype to pull you into the stocks that everyone else is talking about it? Type in the word awareness in the comment and I will share with you more when should we sell our stocks in the next few videos.